This is an introduction video. This is just me going over stuff, talking about stuff that you guys should already know. If you don't know this, amazing. You can get to know this. Okay. So firstly, no one can be 100% right. You need to know this. All right. But what we can do is we can adapt to the real movement in trading. So that means whenever you get stop loss, you lose a trade, whatever goes wrong, you find out the reason. Why did it go wrong? What did you do wrong? And when you do find the reasons, you consider that in the next time you trade. And that's how you get higher probability wins. So you only take the setups that confirms everything, if that makes sense. So basically, you take high probability moves. All right. Second thing I want to touch up on is mindset. Mindset is probably one of the most important things in trading. You need to have a clear mind when you trade. That means you can't have any nonsense on your head. Yeah, nonsense. You can't be going over stuff, girl issues, family issues, man issues, whatever. You just gotta have an open, clear mind when you trade. Okay. And also, you need to see your money as a capital rather than an income, because when you see it as an income, right, you're expecting way too much. You're expecting, oh, I need to make £5,000 to pay the bills this month. Boy, like, you don't need to do that. All you need to do is make sure you end up in profit in the week or break even. You see what I'm trying to say? That's why I personally like to set soft targets. So for the week, but my real aim is end up in profit for the week or break even. That's how my minds work, and that's how it works for me. Okay, having said that, I want everyone to count your profits in pips or percentages. So pips is usually good, so that you can say I am 140 pips up this month, rather than saying I am £10,000 this month. It's gonna have a weirdly impact to your mind. Then you're gonna be thinking, I'm £4,000 down this month. Damn, that's a lot of money. So rather counting them in pips or percentage wise is obviously better. It's good for your mindset. Let me just say that. And obviously you don't want to realize this, but it does play an important role. All right. The next thing I want to touch up on is patience. Patience is probably another important aspect in trading. You need to understand to hold the trades. Firstly, you need to do your analysis, and then you need to hold your trades, because I'd rather take one trade that's banging than take 50 trades which I don't know the outcome of. Most of them are probably forced entries. So yeah, just saying, one trade can make you 10% up. So yeah, keep that in mind. Obviously it depends on your strategy as well. I have a little chart for you guys. So that is the 3 layers of patience. This is pretty good to watch. So one patient comes in where you waiting for the trade. One is when you're holding the trade, and third is growing your account. All right. So as you can see, when you're waiting for the trades, you do not break your rules. You enter when your rules tells you to. Don't get in early. That's the second one. And never chase price. So if it's going down, I want to short it. No, Am I an idiot? Yes. So yeah. So you gotta hold your trades first. Secondly, never cut early winners. You can take partials, which I like to do after there's a break of structure. And yeah, wait for your TPs, man. If they hit, they hit. Amazing. If they don't, you still take partials. Okay, in terms of growing account, never risk too much because I got a story to tell about over leveraging and how I blew my account. It's just stupid. And since that time, I've never blew an account ever, because I know I learn from mistakes. All right. Avoid shortcuts. I personally believe in taking partials. Helps you grow account, which is always good, but it depends how you trade as well. And have a long-term plan. So I hope you guys understood this. All right, guys. So I read this somewhere. So 10% is your entry, 10% is your risk management, and 10% is your exit. But that 70% is all patience within trading. So if you can be patient, amazing. All right. So I just want to go over one thing, how I blew my account. If you guys want to hear this, you can hear this for free. But it all started with me over leveraging my trades. I was trading gold, and you know how gold moves. So when I started over leveraging my trades, I was entering trades bigger than my account can handle, right? And I was constantly looking at charts, stressed to the max, right? And obviously, that will have a negative impact within my emotions, meaning I'll make uncontrollable decisions like cashing out early or making my stop loss bigger. That means I'm risking more now. And all fairness, it just ended up in a big loss. So what I done, I funded a little bit more money, and I was just taking losses after that. I lost my focus. I was revenge trading. I felt like, boy, I need to make my money back somehow. You get me? And then it's just my whole mental side. It's just unfocused that time. And I was taking decisions from my emotions rather than my knowledge. You guys understand? And when you do that, nothing goes well. And you just take losses and losses. And eventually I blew my account. My account was to zero, innit? So, yeah. But the good thing from that was, a good lesson was that I learned. I've never blown my account since then. Also, I want you guys to know this, right? So, obviously, you need to avoid all the distraction or negative influences whenever you take a trade. But also, sometimes it's always good to take a look at analysis. You don't have to necessarily be in the trade, but you take analysis and you see how it plays out. Because in this forex industry, right, the money will come. It will come during the process, all right? And also, I want you guys to know about risk to reward. You probably heard that a lot. I don't know if you have. Most of you probably have. The bigger the risk reward, the better it is, basically. So, risk reward means, let's say I have a risk reward of 1 to 5. That means if I risk £1, I'll make £5. If I risk £100, I'll make £500. 1,000, I'll make £5,000. So you need to understand that. And it's not all about pips, all right? It's not all about pips. I'm not talking about pips, but I'm talking about pips as in trading. You got risk. So let's say you risk 5 pips to get 25 pips, all right? That means your risk to reward is 1 to 5, because 5 times 5 is 25, all right? And in the scenario 2, right, you risk 50 pips, but you made 200 pips, all right? 200 pips sounds a lot, crazy madness, right? But in all fairness, it's 1 to 4 risk to reward. So it doesn't matter whether you trade long, can't get to my days. It doesn't matter if you trade, my days, am I dumb? If you see a small setup with a good risk reward, just take it. So yeah, I've been talking for a long time. I hope you guys get what I'm trying to say. Also backtesting, if I already covered this or not, but backtesting is key. Backtesting makes you a better trader because you get to learn stuff, right? So always backtest whenever you get time. All right. So final thing I want to talk about is market structure, right? So next video is gonna be on market structure, which is me. It's one of the most important thing when it comes to trading. This is probably the first thing you should do, is look at market structure. So you should know this. 80% of the trades are continuation and 20% are reversals. That means 80% of the trade go with the trend, 20 goes with the counter trend. And if you can't figure that out in the market, you're just no good. So understanding market structure is really important, and I'm going to be going through that on the next video, so look out for that.